The Toronto Real Estate Board has just released their real estate market stats for July of this year in comparison to July of last year. And today we're going to go over the 5 most important takeaways. Number 1, the number of transactions. If you see our video from last month, you'll notice that the number of transactions had normalized in June of 2020 in comparison to June of 2019, where the change was almost at 1%. Now in July, the number of transactions has actually shot up. It shot up by almost 30%. And that's a very exciting figure. And why is this happening? It's due to the pent-up demand that we have experienced due to COVID-19. And because of that, we're having spring market conditions in a summer market. The second takeaway is the number of listings. Last month, we saw that the number of listings had only increased by 2% compared to last year. This month, July of 2020, we have noticed that the number of listings has actually increased by 25% compared to last year, July of 2019. And this is great because inventory was very low in June. So July, the inventory bumped up, we had the buyers, and the market's really been doing very well. And the third takeaway is very interesting, the average days on market after a home is listed. Because usually in July and August in real estate, they're usually dead months. People are on vacation, very few transactions are happening, very few listings are happening. And as a result, the homes that are on the market sell a little bit slower and are on the market a little bit longer. But in July of this year, we experienced a huge decrease of the average days on market. And it was actually a decrease by 26%. And now the average days are only 17 days, which is incredible. So things are moving very, very quickly. And the number 4 takeaway is average selling price. The average selling price of June of this year was actually fantastic. It was up 10% compared to last year. But now in July, we've gone even higher. We are up 17% in selling price compared to last year in July. Now, our brokerage has noticed, though, there's a difference between different price points of homes. So what we're noticing is that homes priced less than the $2 million mark are selling like hotcakes, are doing very, very well, whereas homes that are above that $2 million mark, those have slowed down a little bit, but again, depending on where the location of the home is. So now let's get into what the average price of your home is in July of this year. If you own a detached home, your average price throughout the GTA is at $1.15 million. If you're looking into townhomes, your average price is $733,000. And lastly, condominiums, the average price is at $635,000. And now the last thing I want to discuss is if we were to break down these homes according to condos and low-rise homes, the low-rise market is doing definitely a lot better than the condo market. Condo market has increased their transactions by 6% compared to last year, so they are doing very good. But one thing you have to keep in mind is the rental market in condos. It has slowed down now, and there's 3 reasons for this. Number 1, majority of the universities and colleges are going online, and students, because of that, do not have to come onto campus, so they're staying back home. A lot of these international students, for instance, and they don't need to rent out properties that are near the school. So that's one big reason. Second reason, a lot of landlords that used to do Airbnb rentals are now forced to switch into long-term rentals due to the low demand because of COVID. So there's a lot more inventory of long-term rentals coming into the market with those landlords switching their type of rental from short-term to long-term. And then the number 3 reason is immigration. Immigration has basically stalled now because of COVID. It has big time slowed down, and that again has decreased the rental demand. Now, many of these reasons are short-term effects. Hopefully, when all this COVID is over, we found a vaccine, things do start to go back to normal and we have a high rental market once again. So overall, this month of July has been like no other July I've seen in the last 12 years of being in this industry. It is exactly like a spring market. Things are moving. There are so many first-time buyers in the market taking advantage of the low interest rates. And also, I think not only because of the pent-up demand in COVID, but right now people aren't vacationing. So they have the time to go look at their, next dream home that they want. They have the time to think about investments. So because of that, there's a lot of demand, especially in the low-rise segment that we're noticing, and also in the investment portion of it. Now, keep in mind, like I've always been saying in my videos, a lot of the economic ripple effect of COVID hasn't been felt in the real estate market, because the real estate market always lags at least 6 to 8 months after a major event or downturn, right? So government stimulus is going to be ending soon. Mortgage deferrals should be ending in October of this year sometime. Wage subsidies are ending as well, just with the government stimulus. So I would say around October, November, after that is when we're really going to start feeling the effects, if there is any effects of COVID. But right now things are looking great. So if you're looking to buy or sell, do give us a call. This is a great time to be putting your market listing into the market, and we would love to help you out. Any questions, you let us know. But if you're liking these real estate update videos, do subscribe to our channel below so we can continue bringing the latest news. Thank you, stay safe, and take care.